by welcoming Chris Lowell. He is one of the main directors of InnSure, and he's going to give just like a brief introduction on what InnSure is, what InsureCore is, and kind of what we're talking about here with GreenieRE. So, Chris, feel free to kick it off.
Fantastic. Thank you, Valkyrie, and thank you everyone for joining. My name is Christopher Lowell, Managing Director of InnSure. So a little bit of background on InnSure. InnSure is a nonprofit innovation hub focused at the intersection of climate change and insurance. We fundamentally think from the perspective of what does society need from insurance, but we also think it's good business. We focus on three main pillars. One is reducing the protection gap, so getting insurance into as many people's hands as possible, because we believe it is one of the best financial levers to bringing individuals, businesses, and communities back on their feet after a disaster. Second, and a little bit of the focus today, is insurance needs to enable and accelerate the transition to a decarbonized economy. So that means supporting fields like renewable energy, clean transportation, clean buildings, and efficiency. And lastly, we think insurance needs to help facilitate resilience. So that's providing the tools, data, and analytics to individuals, businesses, and municipalities to help them make appropriate decisions and trade-offs between their own resilience and investment efforts, paying for insurance premiums, and/or post-disaster recovery costs. We have a number of programs, two of which are going to be highlighted today. I'm going to talk about the other three very quickly before passing it back across. One is in May of this year, InnSure will be launching, sponsored by NYSERDA, a innovation prize. We'll be giving away approximately $5 million of funding to startups who are creating new insurance products which support the reduction in greenhouse gases. For more information, go to our website, www.insure.org, or reach out to any one of us here and we can talk more about it. As part of that, we're also building up a data and analytics sandbox to support the winners and applicants of that program. And additionally, third set of programming we have is something we call community embedded insurance, which is working with individual communities to help them understand their risk management needs and rethink and reimagine insurance. Our last two sets of programming are the focus of today. One is something we call InsureCore, and Valkyrie is one of the leaders of InsureCore. It matches with Peace Corps. And the goal is to build an army of climate passionate insurance professionals and provide networking opportunities, a platform for professional development, training and learning, and career advancement opportunities. And as one of the pieces of programming within that, we've launched a webinar series. And this is the first inaugural edition of that webinar series. And we've decided to focus on one of our other bits of programming, which is GreenieRE. GreenieRE is an attempt to build a mission-driven reinsurer with a goal to provide risk capital to climate-friendly technologies that support the reduction of greenhouse gases through a number of efforts and programs. And that's all I'll actually say on GreenieRE right now, because I think Amy will likely give a little bit more detail on it throughout. So that's everything on InnSure, InsureCore, and GreenieRE, and I'll pass it back over to Valkyrie to moderate the discussion.
Awesome. Thank you so much, Chris. That was awesome. Yeah, happy to kind of get into it now, introducing our panelists. The first is Amy Antczak. She's a coalition partner for GreenieRE, and she also is on the general counsel for Energetic Capital, a company that aims to scale financing solutions for renewable and distributed energy resources. Amy, if you wouldn't mind giving a quick introduction on you and what you do.
Yeah, thanks so much, Valkyrie. I really appreciate you inviting us to be here today. I'm Amy Antczak. Like you just said, I'm in-house counsel at Energetic Capital. I've worked in the insurance industry for about 15 years, practiced law for a few years before that at various law firms. In case anyone watching is not familiar with Energetic Capital, we started as an insurtech MGA called Energetic Insurance, offering credit insurance for renewable projects, but we recently rebranded to Energetic Capital since we are also now offering renewable energy financing as well as insurance.
Awesome. Well, I mean, we'll definitely hear more about that in a bit. And I wanted to introduce our other panelist, Jason Kaminsky. He's the CEO of KWH Analytics, and they leverage expansive performance databases of renewable energy assets to help increase returns and minimize risk on sustainable energy investments. Jason, if you wouldn't mind.
Sure. Yeah. Thank you, Valkyrie. Thank you, Chris and Charlie, and the team for having us here today. So my background, just for context, is actually more on the climate renewable energy side. So I studied like atmospheric science and climate change back in college. I worked at a solar developer, worked at a bank financing renewable energy assets, which I think we'll talk a little bit more about, sort of the role of insurance and project finance and how that all comes together. And then been at KWH, co-founded the company about 10 years ago. And as you touched on, Valkyrie, we are what we call a managing general agent, an MGA, writing insurance on behalf of global carriers and reinsurers, specialty in the renewable energy segment. So we have a specialty product that does production shortfall insurance. And lately I've been growing quite ambitiously in the traditional property insurance market, but still focused at renewable energy assets. So we can talk more about all the fun that entails over the course of the webinar.
Awesome. Well, bouncing back to you, Amy, I wanted to know a little bit more about what you do at Energetic Capital and how you've transitioned to offering this direct financing to businesses and companies in the CNI space. Can you tell us a little bit more about that?
Yeah, I'd love to give a little bit more background about Energetic and what we do. So essentially, Energetic was founded to solve for a problem that was holding back renewable energy development, and that's off-taker credit. And I'm sure some of you know, but most commercial and industrial scale energy projects are financed through project finance structures. I'll give you an example of that. So say you have a solar developer who finds a location to build a solar project and a business who's going to purchase the power from those solar panels that are going on the roof. So the business off-taker signs a long-term contract agreeing to purchase the electricity that's generated from those solar panels. And these contracts are long-term. They're usually about 20 years or so. So then the developer that now has this signed power purchase agreement goes to the bank and tries to borrow money so that they can actually build the project. So the bank knows that the power payments for the next 20 years or so are what's going to fund the debt service of any loan that it offers. So it needs to make sure that the off-taker has good credit and can be counted on to actually pay the contract for the life of the loan. So the problem here is that 90% of businesses don't have an investment grade credit rating. They're either below investment grade or they just don't have a credit rating at all. So think small to medium sized businesses. So the bank's credit committee can't get comfortable with the risk and the developer can't get financing to fund the project. So the co-founders of Energetic were who were solar developers. They were encountering lots of great projects with great off-takers that just weren't getting built because of this problem of off-taker credit risk. So the Microsofts, Apples, Amazons of the world, they don't have any problem getting financing, but the vast majority of the businesses out there who want to put solar on their roofs, they just couldn't get the financing because of this credit problem. So that's where Energetic comes in. And so we've developed a credit insurance product that backstops the non-payment risk of the off-taker. And our insurance wrap acts as a credit enhancement that allows banks to get comfortable with the risk. And so if the off-taker goes bankrupt and stops paying under these power purchase agreements, Energetic steps in, we pay the claim so that the developer can continue to make their loan payments. And what we hope usually happens is that even if the off-taker goes bankrupt, stops paying, we can get a new customer in there and recontract, and so that the claim only lasts for a small amount of time. And so now Energetic has expanded to help solve this financing problem in another way besides insurance, and that's by offering loans directly to the project developers, sometimes with our insurance product and sometimes without. And because even with our credit insurance product, so many renewable developers were still having problems getting financing at affordable, flexible terms. So we're trying to serve the true CNI, commercial and industrial market segment, which is unrated, sub-investment grade corporates, commercial real estate, et cetera, that are really looking for more flexible terms for construction and permanent loans. So since Energetic was already in this market, we're already set up to underwrite and understand the risks. Our team already has the energy and project finance expertise. We figured it was a perfect fit. And so we're really excited about this expansion that we've just recently done.
Yeah, that's great. And you guys are really just optimizing for kind of like that transformation, that transition into these projects. And we're definitely going to get into how we can help illuminate more of those pain points. Kind of bouncing back to Jason, I would love to know a little bit more about the work that you do at KWH Analytics and how your data can help optimize the underwriting of some of these sustainable alternative assets.
Great, thanks, Valkyrie. I think there's a lot of similarities and some differences with what Amy just said. So I'll draw the through line, which is insurance is a form of capital that can help support the financing of assets. And typically, something we like to say is without insurance, there's no financing, basically. So maybe I'll give a little bit of context and focus more on property insurance for the context of today's discussion. And we got a call a couple of years ago from some of the bankers in the space, and they were saying, hey, we're having a problem in that many of our clients are no longer able to get adequate levels of insurance that we expect and that our credit committee expects. And a little bit of what's going on, I know I see in the attendee list, a lot of people have insurance backgrounds and expertise, so maybe not a surprise, but property insurance just globally has gotten more challenging. Nat Cat, natural catastrophe exposure, globally has gotten more challenging. The renewable energy segment specifically had some significant losses that were, I'll say, maybe not underwritten appropriately. So the market was going through a lot of change, right? And we think appropriately brought change for the better. But what was happening was people were not willing to put out as many limits, and there's almost a flight of capital, right? When you're not making money in a segment, it's typical to say, okay, maybe we should slow down, pare back our limits, pare back our exposures. So that was really our first introduction to, is this an interesting segment that we should pay attention to? As you touched on, we have a very large database of renewable energy assets, their technologies, their exposures, and we've built up a very large database of prior losses. So we were able to come in and say, we actually synthetically wrote $80 billion of renewable energy insurance without actually ever writing it, but use that to really calibrate and adjust our modeling, which allowed us to then attract carriers to support us, and ultimately now are writing business for many of the largest reinsurers in the world and carriers in the world. So it's a very important segment. It's almost sort of, I won't say funny, but sort of funny that insurance, I mean, I did banking 10 years ago, and I could tell you in 4 years of banking, it was just a clause in the agreement that was never negotiated. We didn't spend a lot of time thinking about it, to be honest. And in the last few years, it's really elevated to the point where, at the largest conferences in the renewable energy industry, the most prestigious lawyers and developers are talking about the challenges around acquisition of property insurance and how do we as an industry address that challenge. So it's really elevated in importance, I would say, as a class of business for renewables. And, from a carrier perspective, anything climate renewable, these are billion-dollar premium opportunities growing very, very quickly. And there's not a lot of those. There's, cyber, I think, takes up a lot of the attention in the room. Renewables has a lot of similarities, very specialty, growing structurally in exposures. And, our view is you need a unique way to underwrite it. You need to be an industry insider. You need to know a lot about the asset class. And that's the expertise that we bring to the segment.
Yeah, that's great. And I think it's super interesting how a lot of people kind of just fall into insurance. I've had a lot of conversations with people about, you come from banking, Amy, you came from law, where it's just kind of, we're all settling in this environment. And Amy, I was wondering how your work previously in like financial lines and traditional insurance kind of translated into your mission with Energetic Capital, and then on the flip side, also with GreenieRE in scaling more sustainable insurance infrastructure.
Yeah, Valkyrie, this is an interesting question because, to be completely honest, sustainability was not part of my experience when I was working at large insurance companies prior to joining Energetic a few years back. I really hope that things have changed. I think that they have. And of course, my experience is not the same as everyone else's. But my particular experience was that sustainability was not a high priority. I was working in professional liability. So of course, this is a line of business that doesn't think of climate risks probably as much as, property, lines of business, that kind of thing. But, I remember right before I left my last position, I had tried to start an employee resource group that focused on the environment and making sustainable changes within the company where I was. And I was rejected very quickly, despite offering to do all the work. And so I was surprised by that, but in a way that rejection kind of inspired me to make a change and look for a new role and really look for more and innovative, different types of companies. And that's really when I started learning about insurtechs and MGAs. And to me, that's really where all of the exciting innovation is taking place. So, you know, for me, it was really interesting to see that there were these insurtech companies out there like Energetic, like KWH, that were really using insurance as a solution to climate problems, in really innovative ways. And so for me, sort of being rejected by more traditional large corporations trying to introduce sustainability really pushed me to where I am today. So I'm grateful for that. But again, I do hope that things have changed a bit in the past few years.
Yeah, no, definitely. I think a lot of legacy industries like insurance companies, like real estate, like you know, all those kinds of large financial institutions are slowly coming to the realization that sustainability is here and it's here to
Right.
stay, and we need to be able to take advantage of it. With Jason, like you and Amy, we've both been in the financial world at the intersection of climate now for quite some time, and you before just traditionally in the financial world, a world with banking, and now within insurance in the climate space. So, how do you personally see insurance fitting within the broader climate finance ecosystem?
It's a good question. And I sort of want to react to your last question, but I'll take the question you gave me. So it's a good question. My background is project finance. So specialty product that we call tax equity. So in the US, there's tax credits available for all of these assets. Typically, the developers don't have a tax basis, so they sell those credits or they finance those credits with the bank. With the Inflation Reduction Act, you can now transfer those credits. But we were essentially originations and underwriting for renewable energy assets. And Project Finance 101, you sort of take the class in school if they offer it at your school. And you know, the first day of class is basically project finance is identifying risk and allocating risk to the party that can wear it the best. So that is the exercise of project finance. That was the background I had coming into insurance. And you know, finance is all about really allocation, pricing, structuring risk, and then sharing that risk among banks. Almost exactly like scarily the same in insurance. So it's all the same concept, different words, different terms of art, structured and priced sort of slightly differently. But a lot of similar concepts of how do we price risk, how do we structure risk, how do we syndicate the risk, and insurance is reinsurance. But it has a key role to play within the financing ecosystem. If you don't like the credit, you know, there's a few places you can go. You can get a credit default swap, you can get insurance. Otherwise, you don't get the financing. Banks are not suited to take nat cat risk. They do not structure a loan underwriting hail. They just don't. They don't have the tools to do it. They don't have the expertise to do it. You know, there's a whole industry of tax insurance, which actually the banks do underwrite, but you can also pay a carrier to offload and wear that risk on their balance sheet. So insurance is I'm going to call it a tool that's really underserving the amount of capital and the breadth and depth of capabilities and just sort of capacity out there. But it's a tool that can be used to help support the energy transition. And again, I keep coming back. I will sort of react to the question you asked, Amy. Myself and the team that we have at KWH, incredibly mission driven. We're able to attract incredibly strong talent that probably would not work in insurance if they were not working on this space. But when we talk to underwriters, right, they're judged on, are they writing a good book of business? Like, is there a big enough opportunity and a good enough underwriting standard that they want to say, we'll get some capacity to this MGA? So it's an incredibly powerful tool, I'll call it, for talent acquisition. But at the end of the day, you have to be structuring and underwriting very high quality risk that is going to make your carrier partner money. I mean, that's sort of the end of the day. And the point that I'll underscore is climate is an incredibly diverse set of opportunities, whether you're in the tax underwriting world, or you're in the credit underwriting world, or the nat cat world, or anything else. We're seeing new products emerge all the time, and you know, folks like InnSure are helping support the development of new risk products. But that's the message that I'm always sharing, is these are literally billion-dollar premium opportunities with no end in sight. Like, set aside politics, set aside your personal views. The renewable energy is the cheapest form of power in the world on an unsubsidized basis, and it is getting built. And it doesn't matter, honestly, what happens in Washington and what happens on sort of the global stage. It is getting built. It is eating everyone else's lunch. So if you have a book of business, you should at least acknowledge that, is my view, and find a way to underwrite it profitably. And, you know, you can do that in-house, you can do that with partners. But I think insurance is a really important avenue to help support the deployment of, honestly, trillions of dollars of infrastructure capital that needs to go to support the build out of the segment.
Yeah, no, absolutely. I always like to say, and I got this from Austin Renfro, who runs a big brokerage for claims. He was telling me about how basically that insurance is one of the most calculated and data-driven industries in the world. And we have a lot of this information to be able to better underwrite these risks and better take advantage of the fact that, yeah, like these things are happening, and we need to be moving forward for sustainability in mind, but also, like you said, it's good business, right? So kind of going back to the biggest point of this webinar is GreenieRE, right? So Amy, I would love for you to tell me a little bit more about GreenieRE, how it came about, and what we're hoping to accomplish.
Sure, I'm happy to. Love talking about GreenieRE. So back to energetic, we're really proud of what we've been able to accomplish so far. Just to toot our own horn for just a sec, you know, we've got over 1,500 sites in 46 states in our insured portfolio. We've calculated that we've got about 72,000 metric tons of CO2 that's been avoided. So we're really proud of that. But we kept running into situations where we had great developers with great projects, but our traditional insurance partners still couldn't get behind the credit risk for a variety of reasons, and we have to decline the coverage. Now, of course, there's many reasons to reject a deal, but we kept seeing deals that impacted underserved communities that had to be rejected. For example, we've been approached multiple times by reputable developers to use our insurance policy for solar projects in Puerto Rico. But because of the continuing bankruptcy of PREPA, the electric utility there, our insurance partners haven't been able to get comfortable with the risk, even though all of their PPAs have been honored throughout the bankruptcy. So that's been really disappointing. And, you know, we all know that Puerto Rico has been hit really hard by hurricanes. The climate crisis is just going to make them more and more vulnerable. So resiliency in Puerto Rico and getting more distributed energy generation there is so important. Most of Puerto Rico is considered a Justice 40 environmental justice community, but we haven't been able to get it done. And that's just one example of a credit risk that we haven't been able to do because our insurance partners, you know, have deemed it too risky, and it's an underserved community that's being left out of the green transition. So we've come up with the idea of a nonprofit impact insurer called GreenieRE. So we've applied for grant funds from the EPA through the Greenhouse Gas Reduction Fund in order to capitalize a new climate and energy focused insurer that will provide insurance capacity to decarbonization projects with a mission to focus on underserved communities. So we've partnered with a national nonprofit that has applied as the lead applicant to try to establish a national green bank, and they've included GreenieRE as part of their application. That application was submitted back in October. We are supposed to find out in March about the application. It's now March 1st. So we're hoping to find out sometime soon. I don't know if it will be next week or, you know, in a few weeks from now, but pretty soon we should know whether we've been awarded any money, and if so, how much, so that hopefully we'll be able to move forward with getting licensed, getting a staff together, and to start insuring projects, because we already have a pipeline of projects that need insurance. And so right now, GreenieRE is still a dream of ours, but our mission is going to be identify risks that are holding back the energy transition, structure insurance products, to address these risks, collaborate with insurers and reinsurers to backstop these risks, and develop commercial insurance products that can form a foundation for private sector participation with the traditional insurance partners that we've talked about so much. So we expect to issue policies covering multiple classes of risk. So whether that's credit, like what Energetic does, whether that's production performance, whether it's property, weather risks, across multiple market segments. So solar, energy efficiency, storage, clean energy, transportation, EVs, basically any part of the green transition, we want to try to ensure it to get more projects deployed. So that's what we're hoping to do.
Yeah, no, I mean, the whole initiative I feel like is such a I'm surprised that it doesn't exist already. I feel like it's something that we've needed for a while, and I think you touched a little bit on some of these like pain points of kind of like the bottlenecks of GreenieRE and how you're aiming to solve them. And I kind of wanted to pass the question off to Jason, as you're also in, renewable energy. A lot of these projects have to do with kind of like solar initiatives and things that you guys handle on a regular basis. What are some of the most common pain points that carriers or insurers have in underwriting these renewable energy risks?
I'll answer that, and I'll sort of dovetail it into GreenieRE if I do this well. So, within the risks that we write, which are pretty specialty risks, I would say, frankly, anything renewable is a specialty. If you look at how the banks are structured, they're all like renewable energy backgrounds. You don't see as often in the insurance space. But the thing that's honestly the biggest pain point is the lack of data. So we use data, and it took us 5 or 6 years to build up a big enough data set and establish those relationships with the industry and sort of the trusted partner status to acquire that. That give us a view on production risk, on nat cat risk, and we have to deploy very talented engineers to put it in data. Like the data is just chaotic. It's not organized. It's not standardized. So put it in databases and make sense of it, to analyze it, to build models on it that then give us a better view of the risk. So I think that was probably I want to sort of distill it down, is sort of a lack of specialty knowledge about they're all rectangular modules. Okay, it's been a rectangular module for 20 years, but they're very different now than they were then. They're going to very different geographies, exposed to very different natural events. And honestly, a module for 5 years ago and a module today will react very differently to a hailstorm. And if you just sort of say they're all rectangular modules and you price them all the same, you're going to get it wrong, honestly. So that I think is, if I'm sort of a carrier looking at this space, one of the challenges. The other is, I'll sort of put on my MGA entrepreneur hat, is the bar to work with a carrier is very high, right? You need to have a very credible underwriting, appropriately so. We used to joke in banking that utilities move slow, and I sort of joke now insurance companies move slower, appropriately so in many instances, but just the nature of the industry. And there's always sort of a question that I get periodically. It's not where I spend most of my time, but on where does impact capital play a role? And I think it's a brilliant idea to put it within the insurance space, right? Because you can be a well-diversified carrier. I like Amy's point. You can write all sorts of kind of risk and get non-correlated risk, which is what you want as a carrier. Maybe take a first loss position that then is attractive to a reinsurer who's not yet comfortable with a very emerging space, and support ideas that maybe need some training wheels before they're ready to go to the top 50 global carriers in the world for, real capacity. So it's if you sort of take the earlier comments, and insurance can be a very powerful unlock for financing, and you take all these emerging risks and you're like, who's the impact capital that's going to help support it? It's pretty inefficient to be the lender. You need a ton of capital to be a lender for these emerging risks. They talk about the valley of death all the time of how do you scale these technologies? Insurance should be a much more efficient way to do that, to carve off the risks people really care about, put it on a balance sheet that can sort of diversify it and wear it, and package it up and reinsure it. So I think it's a brilliant idea. I hope it gets funding, and I'm interested to see where it goes. But I think either way, the idea that insurance is a catalyst, I come from the renewable space, and I would say that is an idea that people are beginning to identify and understand and unlock. It's not like the natural balance sheet most renewable energy folks think of going to as a first stop. But as innovative companies like Energetic and like ours and like others come to market and educate, I think we're seeing more people appreciate the opportunities available from using that kind of capital.
Yeah, no, I mean, I like the idea that insurance is a catalyst. I talk a lot about how insurance it underwrites everything we do. It literally the devices we're all on, what we're listening to, where we are, everything is insured in some way, shape, or form. And the infrastructure to support the sustainable elements of those things is just as important. It's a big step in the right direction, and I love the fact that we're talking about it now, and it's something that we're aiming to launch hopefully March sometime. And now Amy, I wanted to kind of touch again on these like bottleneck risks, but more specifically kind of from your work at Energetic. What avenues have you seen taken either with your company or with others that have helped reduce the apprehension surrounding a lot of these higher risk climate projects for insurance companies? And if you have any advice that you would give for people that are interested in GreenieRE or like people working in similar spaces, what have you seen and what has worked?
Yeah, I mean, I really think Jason has touched on a lot of this already, but just talking about, demonstrating that you have the data and the expertise has been so important. I know with Energetic, I think, it's been so important for our business, for our success, as showing that we have the data and expertise to back up what we're doing with new climate technologies. Like Jason mentioned, we don't have years and years of actuarial data to demonstrate loss histories that insurance companies need to understand to support a product. And so if you're doing something new, you need to demonstrate that you understand the ecosystem, you understand the technology, you've done the research, et cetera, and that you can explain it all in a way that makes financial sense. Because at the end of the day, your product isn't going to get support from an insurance company unless you can prove that it's going to be a financially successful product. And so for Energetic, what's really been vital has been demonstrating that our team understands the renewable energy space. I think I mentioned that our co-founders had both worked in solar project development. Our employees have a deep knowledge and understanding of energy markets. And so it was really important, especially in Energetic's early years when we were trying to get partnerships with insurers to back us as an MGA, to really convince them that we knew what we were doing. We had developed our proprietary underwriting model to determine loss mitigants, to show that if there was a claim, that there were actually in this particular jurisdiction, we understand the renewable energy credits, we understand the state incentives, we understand if there's net metering, because of course, every state has a different regulatory landscape for solar. And so just really demonstrating that we understand what we're doing, we've modeled it, we have the technology, we have the expertise. And so I think if people want to get into this space and doing something new, you just really have to make sure you have the data and the expertise to back that up. With respect to GreenieRE, we're starting something completely new. It hasn't been done before. So we're really open to anybody who thinks that they have some expertise that could help with us, help with what we're doing. And so anybody who's watching or knows somebody who thinks they might be able to help, please reach out, because we're building this from the ground up and we will take all of the help that we can get.
No, that's great. And I know there's a lot of people that are attending this webinar that are definitely interested and would be willing to help. And, I think we'll have just information at the end of the webinar for people that want to reach out and kind of aid in that. And now, yeah. And then now to, yeah.
Can I add a thought to that Amy said? Which is, there's sort of two sides to this equation, right? One is, are you underwriting good risk, going to make a profit for your carrier? The other is, are you able to navigate the markets that you're selling it into? And I think, Amy touched on the background of the founders of Energetic. It's kind of similar, I'd say, to the backgrounds of myself and much of the team, which is we come from the space and know how to navigate the space and talk to a bank about how they're doing the deal and, be a value-added partner to the brokers that are selling the product. I'll underscore it again. There's a lot of value of being a specialist or a quote unquote industry insider that just can navigate the market and knows how these deals are done. So it's challenging. I mean, I would tell you, like, you know, it took me a while to understand insurance, but I could tell you it'll take a while for a person who's pure insurance to understand project finance. But having a foot in both worlds helps us a ton right now, because we, you know, the question we always get is, are the banks going to accept it? And it's like, well, I know how the banks think. Like, yeah, we know the banks will accept it. And, you know, I say that's the same, like carbon credits. If you're writing carbon credit insurance, you really have to know what are the risks in the market, what do people care about? So I just sort of want to underscore, I think both Energetic and ourselves, you know, there's certainly the risk quality piece, which is important to get right. And there's also the market development piece, which is critical to get right.
Yeah, no, absolutely. I think the tangible value that we can provide other stakeholders, especially people in legacy industries that are used to a certain way of doing things and used to their specific development is crucial in being able to interrupt a space and actually make a change. And now I kind of wanted to pass it along to a lot of the people that are submitting questions. Our first one is from someone that's anonymous, but the question is, have either of you worked with providing insurance products to assist in the development of reforestation or afforestation carbon projects? I'll let whoever wants to take it.
I have not, but I'm sure that there are other companies out there that are working on this. I just have personally not done that.
I'd say the same. Sorry, I wish I did.
Yeah, no worries. We're answering. Okay, awesome. And then the next question is from David Bossi. I believe I'm pronouncing that correctly. Is GreenieRE anticipating becoming an insurer or a reinsurer, or are you developing products you hope to get insurers to put capacity behind?
So we are hoping to act as an insurer. And our initial plan is to work with existing MGAs, so KWH, Energetic. There's a lot of other MGAs with existing climate-related products that we have been in touch with and we've talked to, and we've gotten letters of support from them, so that we can sort of hit the ground running and backstop some of those products that are already existing in the market. And the goal is for GreenieRE to take on a first loss layer, so that we can get the insurance partners of these MGAs just more comfortable with taking on some of these risks. We also hope to work with InnSure in developing new MGAs, new products to cover some of the risks that we have encountered for which there are not insurance products yet in the market. And so we're really hoping that GreenieRE can allow some of these products to get started out there and hopefully help them get traditional insurance partners to be part of this ecosystem with a private and public partnership, since we're hoping to get public money from the government in order to cover some of these risks.
No, actually add in, you know, this wasn't the plan from the beginning, but the timing, it would be amazing if the timing worked out right, if the insurer's NYSERDA Innovation Prize had applicants and winners who actively need risk capacity, who are creating insurance products specifically designed to increase climate tech adoption to reduce greenhouse gases. And suddenly GreenieRE was around to provide some of that risk capital. It would just be, you know, that's the type of sort of ecosystem development and stair-step nature we need in this industry, because it's going to take a multitude of different types of stakeholders, all making incremental creations and changes to support each other to, you know, sort of get what we need to get to.
Awesome. Next question is Mariana Miller. She says, can you talk about how you see GreenieRE partnering / working with government organizations?
I can take that. So for government organizations, well, one of our main partners is the applicant under the GGRF, in which they're applying for the funds to create a national green bank. And so we hope to be able to work with them once we establish GreenieRE in order to help with the financing of their renewable products and decarbonization projects. There are other community financial institutions that we hope to be able to work with GreenieRE. And I'm sure that there are lots of other opportunities to work with governmental organizations that we haven't even thought of yet. So we're open to it. like I said, GreenieRE is still a dream. We're hoping that we will get the funding and we'll be able to get it off the ground. So I feel like there's probably lots of opportunities that we haven't even really thought through yet. But we're open to working with any organizations that want to work with us.
I'll also add that as part of, and these things are not inextricably entwined, but a lot of the answers sometimes are. This NYSERDA Innovation Prize, as part of that, we're convening, and we have convened one already, a government roundtable specifically to discuss the pain points in this climate adoption and climate tech space that government entities have, and those cross the lines of the energy regulators and energy organizations within states, the green banks in similar states, as well as some of the other entities, the Department of Energy, et cetera. So getting both their feedback and understanding their pain points so we can collectively create insurance products that solve those pain points, and hopefully that are backed up by the risk capital within GreenieRE would be the vision that we hope to have in a number of months from now.
Awesome. Well, great. And then we have a couple more questions. This one, I believe, is kind of directed towards you, Jason. It's from Mike Kalon. What regulatory changes / policy initiatives are necessary to facilitate additional entrants into the property space? Seems that insurers are exiting many of the markets where renewables are active.
Yeah. Hey, Mike, thanks for the question. It's a good question. I saw it pop up and I've been thinking about it. I mean, there's a few issues, I think, that have led to our current state of the property market and renewables. Probably core to that is that we've been building in just riskier areas. So people build in Texas because it's regulatory light and you can get the interconnect and you get the contracts. But there's also quite bad nat cat events. So like from a policy, well, let me say non-policy. I think one of the, I call it like the third era of insurance. I don't have time to sort of go through all three eras. We could talk offline. But the current era of renewables and insurance in my mind is that we're building resiliency into these assets. So like research in hail has been massive in the last 18 months. A lot of the team at KWH was at a big NREL, the Renewable Energy Lab event this week, and there's a ton of discussion and research on hail. So just I'd say non-regulatory is just continuing to permeate that knowledge to builders, to operators, to insurance companies about how can you actually mitigate the risk from the physical asset. There potentially are roles for an entity like GreenieRE to play, which I'll call government funded, to take on some of that risk potentially. But I don't have a good answer, unfortunately, for you, Mike, of like, what sort of policy would compel a carrier to want to support this more? I think it's more of a market decision, right? It's getting the structures right of self-insured retention, which is basically the deductible, what kind of limits people are willing to put out, how it gets syndicated out or reinsured out to these markets, and then just educating and underwriting to the things that the developers can do and hopefully are doing to help mitigate the loss that's actually out in the field.
Yeah, no, that all makes sense. I think a lot of people are scared in the California markets because we're going through something crazy over there. So hopefully a lot of that is remedied by programs and by the market kind of shifting to what we need it to shift towards. I think we'll take 2 more questions. Let's do there's a question from John Bethel. Do you see parametric insurance playing any role in developing these sustainable markets? For example, in reducing the protection gap in, say, places like Puerto Rico?
Want to take that one, Amy, or me?
I was going to say, I'm not super familiar with parametric insurance. I know that there are companies that are working in with parametric insurance in the climate space. I know AXA Climate does a lot with parametric insurance. I'm not sure if they're working in Puerto Rico, but I know they're doing a lot with parametric in terms of covering renewables, and also I think they do a lot of agriculture coverage. So again, I'm not an expert in parametric, but I know that there are companies that are really working on that and probably transferable to covering all sorts of risks in the climate space.
Yeah, maybe I'll add to that. So parametric, just for the non-insurance parametric experts on the line, is basically you don't need to necessarily file a claim. It's parametric in the sense that there's an index, a third-party index you can look at and say, if it rained more than a certain amount over a certain period, you get paid. If a hurricane of a certain intensity hits a certain point, you get paid. So the idea is that it's a quicker payout kind of policy based off typically some sort of environmental or climate index or condition. We don't play in that market, so I don't have a direct view. I can say I've met a couple people. I do this in the developing world more, and I think that they've developed some really innovative sort of like micro parametric products that can help support certain, whether it's agricultural risks or other kind of risks. We've seen it in the renewable space, typically parametric hail. And the idea is if hail of a certain size hits a certain region, you get paid out. I think what we've seen is more limited uptake than maybe you might expect. A, because the banks don't really know how to think about it. B, it's kind of hard to measure at a certain location what the hail is. It's like not a well-characterized risk. So there probably is a role to play. It's not an area I'm neither an expert in, but I know that there are companies out there that are, as Amy said, focused on developing products that can help support that. But we see, I think it happens more in things like crops or, you know, if you're a ski resort and there's not enough snow, you can get paid out. If there's a flood and you're a homeowner, you can get paid out to sort of recover some of your loss. So they're very successful in certain segments, not yet in renewables.
Yeah, I've seen a lot of uptake with homeowners where in the beginning it's kind of an interesting thing to try to explain to a homeowner that, hey, yeah, you don't file any claim. This is unlike any insurance policy you've ever had before. If you get hit, you just get paid out. It almost seems a little odd, a little odd to kind of get into. So adoption is gonna be key there. And I am definitely a believer in parametric insurance and what it can provide, especially for people that are in some of these areas that might not have as much of an insurance saturation. Parametric is just like a really easy, simple way to support those folks. And we'll do one more question from someone that's anonymous. As they say, do you think it would be possible to get more companies to put capital behind ensuring some of the riskier clean tech projects by offering incentives like tax credits or even carbon credits in states where the market exists?
Tax credits. I mean, the question is, okay, the question is, the question disappeared from my screen. I think it depends what kind of capital. If you're a bank, right, at the end of the day, it's what's your return and what's your odds of repayment. So like a tax credit is a way to create value for someone. You know, the bank is still going to underwrite a new technology with a higher return hurdle if they write it at all. So maybe a tax credit just sort of creates more value that can then be chopped up and given to people. So my answer, I'm curious what Amy says, would be like indirectly, yes, it's probably not going to compel someone to make an investment that they're uncomfortable with at a rate that they're uncomfortable with, but it can add value into the sort of value box that can even get allocated to different people. And I think that in and of itself will help spur, whether it's bank capital or private equity capital or philanthropic capital or whatever it is, to help support that investment. Sorry, not the clearest answer, but I'd say indirectly.
Yeah, I mean, I don't necessarily have the answer to this either. I mean, I think that tax credits might be a little tricky because, you know, we see that a lot of renewable projects have trouble finding tax equity financing to begin with. And so if there were additional tax credits, I mean, maybe that would bring some additional capital into the market. But it's, and maybe with transferability, things are going to get better. I don't think we're really there yet. It's just been tricky with finding companies to make the investments who have the tax liability. And I think with carbon credits, that's just such a new world that I think there needs to be more understanding of it first before it really attracts more investment into the space. I think that carbon credits is really, you know, it's kind of niche right now, but as more companies understand it, and maybe if there was additional tax credits that would, expand the understanding, but people would have to understand it more. Maybe that would increase additional investment. But I think right now it's just a lot of companies, it's a market that's just not very well understood. So hopefully in the future.
Well, awesome. Well, I mean, first off, thank you so much to our panelists. It was great talking with you and hearing about your companies as well as the general space and then how that pertains to GreenieRE. We're really hoping to kick that off this month, and I think it's an incredible initiative. Ever since I learned about it, one of the main defining factors of me in joining InnSure and InnSure Core. So definitely looking forward to that. And thank you also, Chris, for joining, and for everyone hosting who has come here and who has asked a question. It was great to have everyone on, and there will be a recording at some point posted. I know we'll kind of handle where that goes, but you will be notified if there's a recording where it is. Yeah, are there any other kind of final thoughts from any of our panelists?
Yeah, Valkyrie, thanks so much for hosting us, and thanks to InnSure Core. I just wanted to add, I know I think I said it before, but again, we're really trying to get GreenieRE off the ground. Hopefully we'll get notice of funding soon, but regardless of what happens, we're going to try to make it work, and we need people to help us. So if you have expertise in insurance, in renewables, in financing, and you want to get involved, please reach out, because we would love to have any help that we can get, with setting up our company, with staffing, with getting new pipeline, with finding new partners to work with. So please do reach out if you're interested.
Alrighty, sounds good. Well, thank you everyone for joining, and we will be signing off here. If you want to stick around, feel free, but we'll just be hanging out. So
Thanks, everyone.
Bye.